¿Qué te iba a decir? Que yo te iba a decir, la sobrina tuya, la que vivía en New Jersey, ¿qué pasó con ella?
Ay, mi hija.
Hey, afternoon, everybody. Hey, give me a couple minutes. I had to quickly switch from my MacBook over to the iMac, so let me move everything over real quick.
Against a new tomorrow, so I guess I'll just believe it that tomorrow never comes. I said night, I'm living in the forest of a dream. I know the night is not as it would seem. I must believe in something, so I'll make myself believe it. This night will never go. Against a new tomorrow, so I guess I'll just believe it. Tomorrow never knows. I said night, I'm living in the forest of a dream. I know the night is not as it would seem. I must believe in something, so I'll make myself believe it. This night will never go. You take
really count on her.
She must be really famous around here.
She is. I've got her autograph back at home.
Must be small.
Yeah, it is. You can barely read it.
Get ready for Express Talk Celebrity Edition, coming Wednesday, April 22nd. We're bringing you two of the most watched TED Talk speakers of all time. Leadership expert Simon Sinek shares insights into a new way of thinking about what success looks like. And Dr. Amy Cuddy reveals how to be more influential in your professional and personal life. Register for the free video stream at expresspros.com/expresstalks. Brought to you by Express Employment Professionals.
Some guy called Peter managed to jump a skipping rope 12,000 times in an hour. Really, it's a world record. We looked it up. Well, we think he'd like Spotify Premium. Instead of just 6 skips an hour, Premium gives you unlimited skips.
So you can jump between tracks as much as you like. Learn more about Premium when you tap the banner. Go on, do it for Peter.
I can't get these memories out of my mind, and some kind of madness has started to evolve. I tried so hard to let you go, but some kind of madness is swallowing me whole. Yeah, I have finally seen the light. And I have finally realized what you mean.
All right, what's going on, guys? All right, so let's get this thing started here. Sorry, it took me a while to get everything moved over. I was outside on the MacBook, and I decided it wanted to rain. So we'll get this going. If let me just make sure my mic is on. Yeah, all right, good. We're good. We're good. Alrighty, let's dive right into this. Let me pull up Trading View. Bam. All right. Let's move this over, and we're solid. How's everybody doing on this beautiful Saturday? Everybody doing great? We did have a pretty decent week, so I definitely want to go over some of the trades that we took, and I know a lot of questions are out there about, and honestly, I understand them. I had to deal with it. My first couple of months was actually understanding how to trade it, how to manage the trade. A lot of people, take profits early, and there's nothing wrong with taking profits early, but you have to understand, what is your trading plan, right? What are you looking for? What is your targets? Okay. And then you'll have an understanding of how to trade it. There are hundreds of ways or strategies to trade Forex. There is, in my eyes, there is no one strategy that is better than the other. It's all on how you execute that trading plan and trading strategy. All right. Let me just look at everybody on the group. Yeah. So everyone pretty much in the group has been on our calls before. So you guys have some experience under your belt. My strategy, honestly, is not designed for a new trader. All right. There's a lot of technical analysis that goes into my trading plan. there's also a lot of mindset and strategy that goes into it as far as managing the trade. So while I'm pretty much this Zoom call is going to be looking over the trades that we took this week and then breaking down exactly how I traded it and how I managed the trade. All right. To kind of give you guys an idea of, you know, when you see me post in the chat that hey, I'm on break even, and, you know, if it hits my break even, no big deal. If it hits my, you know, take profit 1, this is what I'm doing here. If it hits my take profit 2, this is what I'm doing here, and so forth. So it kind of answers a lot of questions as far as, you know, how I'm getting percentages that I'm getting, how I'm managing the actual trades themselves, and then going from there. All right. So let's dive into it. The start of the week was, I think, like the 6th, right? Let's see. Yeah, it's like the 5th or 6th. Perfect. Yes. All right. So those of you guys that are in our Pips and Blue Trade Ideas group, that's where I typically post all of the trade sets I'm looking at, right? So right over here, you know, you can see, yeah, bam, we're on it. All right. You can see what I was posting. So here on the 6th, right, I was looking for, the first setup I was looking at was AJ, right? And AJ didn't actually come down to where I wanted it to, right? I was looking for some mitigation down into this H1, and then I wanted to take it up to the gap, all right? This, to me, was the lowest risk that I can get into the trade. Obviously, we could have market executed here, but I needed to cover all of this for a stop loss, all right? And for me, it's just not worth getting into a trade down there for me to do it, right? Let's see, that was on the, right? You can see here was the gap, and I was ideally looking for price to get into this area down here. I was also possibly going to take a little higher setup here, but that didn't happen, all right? There was a harmonic on it, all right? Where was the harmonic? No, that's GA. I know there was a harmonic on the sucker. Oh, well, now I can't find it. I know I posted a harmonic on it, but ideally, yeah, I was more interested not in this drop. I wanted to see it grab the liquidity up here, right? Because these are all the orders are, and ultimately it did grab it, and it grabbed it. You know, obviously I can see it's going to start closing in this gap. So for me, this was a new trade. You know, sometimes the market just gets away from you and you can't get into the trade. All right. I personally, you know, don't mind this. You know, if it doesn't pick us up, it doesn't pick us up. I can delete this and I can delete that. That order didn't happen. All right. Now going into the first trade of the week that we did take, right? One of the things I was looking at, obviously, is the dollar index. Okay. The dollar index to me is the root of everything. Everything is derived from the dollar index. All right. Whether the dollar index goes bullish or bearish determines on every other currency pair. All right. There obviously are some higher weights of correlation, but it ultimately starts with the dollar index, which in everything I've read and in my eyes is the ultimate safe haven currency in the world. Okay. And you can see, obviously, what I was looking at was back here last week, we were stuck in this range. I wanted to see if we were going to break out or break below. We broke out. I wanted to see if we were going to continue and make a new high. I'm still bullish on the DXY, but I was looking for some of the inefficiencies down below to get mitigated before we go any higher. So you can see we were trapped in here for a good almost 3 days. We were trapped in here, and the dollar index was just going sideways. But in the beginning of the week, I was looking for that bearish momentum, right? And you can see this is where we were trapped. We were trapped right in here, right? And I was looking for that bullish momentum, and we finally did get it. We took out the first target I was looking at on the dollar index. And then ultimately I was looking to get into here, right? And once we get into here, this area here should be supported, right? We should not drop below this, right? We should continue to go bullish. I just wanted to see some of this mitigation play out and us go into the top side, all right? if you guys, this is a pretty small call. I wanted to give everybody an opportunity to ask questions and stuff. So throw it in the chat. I do have the chat on another screen, but I'll take a look at it. And at the end, you definitely can ask some questions. All right, give me a second here. Let me just move this over. All right, boom. All right, so I've got the chat open here. So one of the key things to my success in trading was understanding the correlations. All right, understanding why if the dollar index goes up, right, if it goes bullish, why Euro USD goes down. Why if there's a high demand for safe havens, right, why your anti-per diems, right, like the New Zealand, the Australian, and the Canadian go down. Understanding these correlations is key. Yeah, absolutely. Mike, throw in the, if you could, throw in the chat the trade setups that did take a loss. Honestly, the only two that took a loss for me were the indices, the NASDAQ and the S&P. I never got into the Dow on it. But throw in the chat if you do have a chart, throw it in. Because I'll go through my list of what I'm going down, but yeah, I don't, other than the NASDAQ and the S&P, that's the only two losses I took this week. But okay, perfect. Yeah, we'll go over the S&P. Absolutely. Yeah. All right. So obviously going into the start of the new week, we're in between two areas. Obviously we've mitigated this one. I'm still keen on seeing if we can at least get into some mitigation here. All right. But now the reason that I'm very supportive of this area, right, is because of this candle right here. All right. This candle right here, how we essentially went into 50% of this candle. All right. And then pulled up. All right. And we moved significantly away from it on the daily time frame. All right. Again, my strategy, and I call it my strategy, but the strategy I utilize, right, is smart money concepts, right? It's understanding why the market moves from certain areas. All right. I'm not, I'm not dispelling or saying that no other strategy is significant or works. They do. I personally utilize this strategy because it makes sense to me, right? I'm a very deep person when it comes to understanding things. I want to know everything about it, so, yes, if we were trading just the DXY, could I come here and ideally, throw a trend line on it and trade off of it? Absolutely. Do I believe in trend lines for longer moves? I do not. Right? Because trend lines to me for a longer move are traps set by the institutions, right? It gives you enough of a winning percentage to think that you are going to be successful, and then they're just going to come and take your money. Short term, it works. All right. Short term, it works. That's the kind of trading that you have to identify what you want to do. Okay. And that's what you have to develop in your plan, right? You need to identify, okay, do I want to be, a great example is Manny. Manny is an excellent example of understanding what you want to get. He gets his little box and he's done. He's happy with that. And that's great, there's nothing wrong with understanding what the limitations of that trading plan are and then maximizing it and taking it. Okay. I still, every now and then when I want to scalp something, I'll put a trend line on, I'll wait for the break, I'll wait for a confirmation there. But in the entire, the entirety or the totality of my trading plan, I am looking for the actual moves, right? I'm looking for that measured move. So I'm going to break it down. I'll kind of go into a little more detail on it. Now, for everyone that still, wants to get some more information, right? I'm going to throw it in the chat, but howdoitrade.com, the 2020 course is the Trade House, guys. You just have to be logged into your IM account before you come to this page. All right. And then you can go here and go through the different phases and all that. This is free to us through our IM account, and it breaks down everything and everything. All right. So like when you're having questions on, you know, man, I'm not understanding the displacement or the imbalance area, or I'm not understanding why that candle needs to get mitigated here. Go through this course, you know, and it'll at least give you some of that baseline knowledge. Okay. So again, you know, I was looking for that bearish momentum, you know, coming out of here. I wanted to, you know, we were trapped. I wanted to see that bearish momentum come down, mitigate some of this. And that gave us the selling opportunity on Euro USD. And then it turned around and gave us the buying opportunity on Euro USD. Okay. So let's get right into it. We'll get to UJ last because UJ was the phenomenal trade. What was this one? This was EuroCAD. All right, let's talk about EuroCAD, right? So on EuroCAD, and this is a setup I got from Lex Waves' session, and it wasn't my favorite setup. I did go with it because I believed in it, but just going into it, you can see for 2 days straight, we literally just went sideways. Okay, we finally did get a little bit of an expansion, right? These 3 candles gave us an expansion on the 30-minute time frame, and I was looking for 2 entries. I was looking for price to come back and come into the mean threshold of this last down candle. Okay, and then ultimately on a smaller time frame, I was able to identify the same type of setup just on a smaller time frame. All right, let's go over to EuroCAD. All right, and I believe I still have the setup there. Yeah, okay. So we're just going to go into replay mode here. All right. Let me go. Here's the expansion. Okay, so we'll come right to this area right here. Bam. Okay, so this was the setup, right? Obviously our target was right back into this high, was target 1. All right, and then target 2 for me was coming into this area here, into this imbalance, right? When it comes to trading, right, obviously I have a directional bias. Is the market going up or down? So on EuroCAD right now, obviously we're just in a huge range going sideways on this 30-minute time frame, okay? Now, how can I play this range, right? Well, you could see that we had an area of equal lows here, okay? So, you know, you can see people can call this, you know, a W if they want, all right? Double bottoms, however you want to label it, okay? Now, these double bottoms did give you an opportunity to catch 192 pips going up. But in the grand scheme of things, right, when you get these swing traders that are looking for 5, 8, 1,000 pip moves, this ultimately crushed them, all right, and brought them either back to break even, all right, or they ended up taking a loss if they never moved their, you know, their stop losses into profit or anything like that, all right. But obviously we were here in a nice accumulation stage, right? This is accumulation, all right. And what I'm looking for is for price to come up and mitigate this imbalance. All right. So once we did get this expansion that broke above, you know, these highs, all right, that's the idea behind it. Okay. Now, once price did that, what we were looking at were these 2 types of entries. All right. And this is how I set up my charts as well. So the most conservative, or I guess you would say the aggressive entry, right? The entry that you just don't want to miss out on would be for price to come into this last down close candle right here. All right. So at the base of the candle is where you're looking for price to come down into. All right. And then we'll get to the stop loss. So the first thing I need to know is where's my entry? Okay. That's going to be my entry. What are my targets? My first target is up here. Okay. That's my first target. And then ultimately, what am I looking for as my risk? Because before I can get into a trade, I have to understand what the risk is, right? How else do I know what lot size to use? How else do I know anything like that? Nothing against anybody and their you know, their trading plans or any educator, but I'll tell you right now, any person that tells you this, right, that says, okay, you know, 0.01 lots, all right, per $100, okay, That to me makes no sense. This makes no sense to me, because what if I have a 50 pip stop loss, and then on the next time I have a 5 pip stop loss? That 0.01 per 100 is not accurate, right? It's not accurate whatsoever. I know you guys have heard me say time and time again, I have to use a calculator. I have to determine what my risk is, all right? And that's kind of what we're going to go into today, all right? So entry was going to be here. Now, what can I find, right, going into that, some other entry points that I'm looking for, right? So here's the let me go to the 15. Okay, so this imbalance here is on the 15-minute time frame, right? Now, why did I go off of this entry here? Okay, why did I do that? Well, it's all about confluence, right? Multiple areas that I'm looking for. So just take it from here, right? So when we're measuring this 15-minute candle from base to base, right? Open to close, all right? You can see that 50% of that candle comes in right at this white line, okay? Which also lines up with the open of the last down close 30-minute candle, okay? So that gives me 2 time frames where this price is there's a lot of confluence into this price, all right? And that's why I did that. You know, I start at the largest time frame. I not at the largest, but I like to look at the daily. You know, if there's anything on the daily that I can see, I go to the 4-hour, all right? Nothing in here on the 4-hour was worth me trading because we were consolidating for so long. The 1 hour as well, right? Consolidation. So you have to get into the smaller time frames. So coming down into this open of the 30-minute last down close candle is the equivalent of the entire displacement area candle, 50%, right? So that was my first entry. Now my next entry, right, and this is how I just mark it up on different time frames. All right, my next entry, you can see this is the last down close candle that needs to be mitigated, right? This candle in the 15-minute. So what I do is I come here and I will throw a fib on it from open to close, all right? And you can see that the 50% of that candle comes in at 1.5232, all right? So now I just keep going lower from there, all right? And I find what my risk is, all right? So now you can see that we have this candle here, right? This is the last down close on the 5-minute, but I want to show you why I didn't go with that, right? So you can see from candle open to candle close, this was the last down close candle. Price came back up, broke above, and then came back down to 50% of this candle. So this position, right? This position has been mitigated out of by whatever market maker forced price down. So when you look at the bigger scheme of it, right? What happened, right? Price came down to mitigate into here. Just like it came into this. You can see how price came back into this down close candle here, all right? So on the 5-minute time frame, this candle has been mitigated out of, all right? And that's how you just literally have to go up and down and check the different time frames. Now on the 1 minute, do we have anything on the 1 minute, all right? So on the 1 minute, all right, this candle here to me doesn't need to get mitigated because there was no push to the downside, right? You can see how there's minimal wick, all right? This candle here has been mitigated. There's no displacement, right? You can see from this candle wick top to this candle wick bottom, it's almost a complete touch. So there is no mitigation that needs to happen here on the 1 minute. And on the 5-minute, this candle here, right, has been mitigated. But now where is our risk, right? Where is our risk? Well, even though this candle has been mitigated, we still have displacement on the 5-minute, right? We still have this area here, all right, that is in need of mitigation, right? And you can see I have my original position still here. So this is where I was looking for price to eventually, if it needed to come down to here to mitigate this wick, right? So that's where I decided to put my stop loss, all right, at the base of that imbalance. Now, what also does that stop loss line up with? Well, on the 15-minute, it is the open and close of these two candles. It's the 100%. I know it's hard to see because my 100% are, you know, they're kind of faded out. They're not as opaque as the others. But that's ultimately where I was looking for my risk to be, okay? So we have on the 15-minute and the 30-minute, we have this area here, okay? And then my next entry, because I'm twin trading it, right? My next entry would be off of the 5-minute imbalance, right? This candle here that created that imbalance. Well, what is 50% of that, right? So 50% comes in, right, to candle close, to candle open, right there. So what I'm going to do is I'm going to take 50%. All right, 50% of that candle is where I want my entry. And that was actually it right there. Okay. So I'll come back out here, and this is the setup, right? Off the 50%. My stop loss is the same stop loss. Okay. So on this setup, it's 14.8, and on this setup, it would be 5.5. And then, of course, you have to account for your spread. All right. So essentially, that's exactly what I was looking at. All right. This setup right here. Let me delete these. We don't need that. Okay. This is what I was looking at. These exact setups right here. All right. Now, how do I determine what I'm going to use for a lot? How do I determine the risk that I need in this? Well, it's very simple, right? Let's just go with the $1,000 account, because either people have $100, $1,000, or $10,000. We just add a 0, right? So I'm doing 2 trades. So me personally, I only risk 2% per setup. So I'm doing a 1% risk, all right? ECAD will go with a 15%, or I'm sorry, 15 pip stop loss on this first one, right? It's 14.9. But now, hypothetically, let's just say it was a 2 pip stop loss, 2 pip spread, right? So it's a 17 pip stop loss. So that tells us that on a $1,000 account, we're using a 0.08, right? 0.08 for this setup right here, all right? And we're risking 10 bucks. All right, risking 10 bucks. Now on this one here, it's a 5.5, say it's a 2 pip spread. So we're gonna go with 8, right? This is gonna be an 8 pip stop loss. So this is a 0.17, right? A 0.17. So we're gonna do the same exact thing, and we're gonna throw it on here. All right, 0.17, 10 bucks. All right. So what that means is that we're going to get 10 bucks for every 17 pips we go. And here, for every 7 pips, we're going to make 10 bucks. All right. That's why I split it, because the return on investment, you can see here is a 13-to-1, and this one here is a 4-to-1. So that's why I personally like to twin trade them. All right. A lot of people have a misconception on what twin trading is. All right. They think that, okay, if Mike is expecting price to go 64 pips, well, I'm just going to cut that in half and make my take profit up here for 30 pips, and I'll just do 2 trades to go to 30 pips. And that's inaccurate. What you're doing by doing that, what you are actually doing is risking, instead of 2% for EuroCAD, you're actually risking 4% of your account. Because what if price actually comes and hits your stop loss? Now you've lost 2 of these setups if you were risking both the same amount of lots on it. Okay, that's where people get in trouble, is they over leverage or over risk themselves. If you're going to do 5% per setup, if you're going to do 2% per setup, if you're going to do 1%, you just have to be consistent. All right, because if you start deviating and say, all right, on EuroCAD I'm going to risk 2%, but on AU I'm going to do 5%. What if you lose the AU but win the EuroCAD? Your percentages are off. Okay, it's all about the first and most important thing about your trading account is equity preservation. Okay, I would rather, and this is, again, you know, this is just, you have to do psychology and mindset training as well. You know, I'm always listening to, especially now that we're home a lot, when I do bike rides or go on walks, I'm listening to audiobooks on trading, When I'm sitting at the pool or in my hammock, I'm doing the same. And human nature, right? As a society, we hate to lose, right? Losing is really bad. Okay. Trading though, when you're trading, losing is okay. All right. And you have to understand that. Losing a small amount, right? And a perfect example would be the S&P 500 trade that we took a loss on this week. Everyone, you know, without a shred of hesitation, I took the loss. No big deal. You know, to me, it was 1%, because I had said I was only risking 1% on it because it was going to be the first move. And I'll go into a little more of that. But taking the 1% loss to me is nothing. I don't mind it. You know, I don't mind whether that 1% is $1.50 to you, whether it's $15, whether it's $150, whether it's $1,500, or whether it's $15,000. That 1% should mean nothing to you. All right. In the bigger scheme of things, if you're trading the way I trade, okay, because one of two things happens, right? If you take the loss, it just gave you more information. And that's what I look for. Sometimes I look for that information. I want that data. All right. And taking the loss gives it to me. All right. I equate it to, and I know a lot of people may not have this experience or may not have this, you know, this analogy to it, but you know, whether you're doing it in a real life scenario, whether you're doing it on a game, whether you're doing it, in a fictional sense. Okay. Just think of a battlefield, right? If you're trying to find your enemy and you have to sacrifice a small amount of your forces, okay, to determine where the actual enemy is so that you can essentially annihilate that enemy, that's what you have to do. You might have to sacrifice 2 or 3 of your soldiers, okay, so that the enemy discloses themselves and makes their presence known so that you can turn around and annihilate them. All right. So for me, taking the loss is all good. All right. So with this setup, these are the 2 plays I was going with, right? Now, on the 15-minute time frame, you can see that we finally did get an entry, okay? We, got into an entry on the 15-minute candle, came right back. It was right at, 8:45 in the morning. I know it was during New York session. So at this point, both orders are activated, right? You're in a small little drawdown on this top order, right? 6 pips, and you're about a pip in profit on the second order, okay? To me, this was this is what I wanted. I wanted that quick move, that quick, you know, downward entry point, and then I wanted to go up. All right. Now let me see where. Okay. So you can see where I posted in here, right? Price has gone positive 29 pips. I'm moving my stops to break even. All right. So here we immediately came down. All right, came down into it and then moved nicely away from it. So Mike, you don't want to see taking its time to get, it all depends, right? So on EuroCAD, right? On EuroCAD, and timing is everything, right? And this is just something you're gonna develop and you're gonna have to learn, okay? So during New York session, right? 8:30 is when like New York session goes into full activity. But during New York session, I either want to get into a trade at the beginning of New York session or I want to get it towards lunchtime hour when the London market is getting ready to close, right? That Frankfurt close, which now on Eastern time would be like around 11 a.m. And then the actual London close, which is an hour later at 12 a.m. Those are the opportune times to get into a trade or right around New York open, okay? So on EuroCAD, because the Canadian is getting ready to start off, and of course the Euro is, you know, almost at its end, right? You know, at 10 o'clock is when Frankfurt, you know, markets close, and then the London closure at 12. So in this instance, I wanted that quick movement, right? I wanted that quick drop. And the reason behind that is, think about it, okay? So price has been just dragging. We finally get an expansion, right? We get an expansion, and relatively, an hour later, we get that nice drop, okay? Get that nice drop. That's what I wanted to see. I didn't want to see a gradual come down. I wanted to see the market come back and mitigate it quickly and then move out, all right? That's what I was looking to see. Now, again, on the Canadian side of this, what were we expecting, right? If we're expecting the Euro CAD to go up, what can anyone tell me, just based on what you think about correlation, right? What would give us some conviction that, one, we had the euro being strengthened, and two, the Canadian dollar weakening, right? Because in order for this to go up, the euro needs to strengthen, Canadian dollar needs to weaken, right? Right. So Gary, absolutely. So we were expecting oil to be weakening, which would give the Canadian weakness, but what would give the euro strength? Anybody? Yes, absolutely. There you go. 100%, right? The DXY would have to weaken, okay? So if the DXY weakens, that gives the euro strength, okay? Remember, you know, you have to use those correlations, right? You have to. Whether you are just looking at the DXY, okay? Whether you're looking at the DXY and say, oh, okay, yes, it's weakening, right? Or you want to go over to the EXY, which is the euro dollar index, okay? And it would be the same thing. Now, the euro dollar index, because this is a futures side, right, has the gaps. It's when the market opens and closes. So, you know, honestly, to look at it, you almost have to look at it a daily like this, and you'll see it, okay? That's why, honestly, I just go to the DXY, all right? I just go to the DXY, and we can look, right? We can look. So when we were on EuroCAD, right, when we were at EuroCAD, and we were here, let's see, this was 8:45 in the morning on the 7th, right? 8:45 on the 7th. And you can see right here, okay. So here we go. Here is 8:45 on the 7th. So as, bam, here's 8:45. So you can see that the DXY, right, came into this area that I was looking at, right? Came into this area that I was looking at. So we are seeing that bearish momentum, right? We are seeing that bearish momentum. And then of course, you know, going into oil, we were seeing, I mean, this was oil right here, all during New York session. You know, when you start to see that, and again, I personally have not been trading oil for a long time. And the reason is because it just doesn't, there's no technical analysis to it. Right? It is literally fundamentally driven, but I was still expecting oil to at least come down and take out these lows, all right? So even though I don't trade oil, I don't trade silver, and I haven't been trading gold, I still use them as correlating factors, all right? So going back to EuroCAD and coming back over here, right? So we did get our, bam, we'll go right here, all right? So we did get our entry right here. Okay, we did get our entry. So now the next candle comes out, all right, we are in profit. We'll just go to this next one. Okay, so this is where I sent out that we were 29 pips in profit, okay? So off of this entry down here, you can see we're, at this point here, when this candle closes, we're 24 pips in profit. Now, this is just something that you are just going to have to determine what is it that you want to manage as far as trades go, okay? I can tell you, and I've said it before, me personally, I am always in a rush to take my oil drops, the CAD weakens. Yes, yep, you got it, Pete. Oil drops, the CAD weakens, man. When price moves 15 pips into profit, I move my entries to break even, 1 pip break even, to cover at least like you know, my commission or whatever it is. I never want to lose money. Okay. On a pound pair, I do it at 25 pips. All right. But it's all relative to what my targets are. Okay. An example would be if I'm only looking for a 35 pip move. All right. And I'm using a 6 pip stop loss. I'm not going to wait for price to go 25 pips. All right. Or I'm not going to wait price to go 10 pips. All right. I may move it as soon as I get into profit on a 6 pip stop loss. If I get to 9, 10 pips in profit, I may just move it right then and there to break even. If I'm only looking for a small move. All right. Do you re-enter when price comes back to hit your break even? It all depends, Gary, right? It all depends. And that's something, again, you're just going to have to, you're going to have to learn on why, you know what, this is what I'm going to do. I'm going to explain that in the UJ trade setup. All right. Because there was a couple people asking me, you know, they got stopped out at break even on UJ off the lower entry. Should they enter in on the top entry? And I'm going to give you my analysis on that, right? The quickest answer, the easiest answer, Gary, to give you is if, and hypothetically, if price did not come down on ECAD to this entry here, right? And we were only here, right? This say price came to here and then pulled up. All right. We didn't get this entry down here. And just say hypothetically price moves, you know, say hypothetically 19 pips in profit from this entry here. All right. This is a decision that you are going to have to make. I can tell you what my decision would be. My decision on this would be I'm not at break even yet because I'm expecting price to come down and fill this order here. All right. It's a risk that I personally am willing to take. All right. Many of you over the last year have known, you know, I don't violate my rules. So I know that this is a 1% and this is a 1%. I don't violate this, right? I don't violate my 1% rule. So even if I take this loss, and even though I was 19 pips in profit, it came back and took me out, I only lost 2% and I could care less. Okay. Because, and you'll start to see, if you really start to journal and start to track your trades, you're going to start to see that, man, you know, and I said it on a call maybe last week, the week before, but in the month of March, I actually had more losses than wins, but I still had something like, I don't know, like a 58% monthly, increase. All right. With more losses than wins. And it's because I will take 4 or 5 losses. I will take 10 break evens just to get those 2 trades that go 17-1. Okay. The best way to track or journal your trades, there's 2, Ray, there's 2 things that I would recommend. I used to do it the old school way in an Excel spreadsheet. But you can go to forexfactory.com, okay? And you can create a profile. And then from there, you can go and create a trade journal, or you can go to MyFX and you can go to you just create a portfolio and you can create a trade journal, and it tracks all of your stuff in there. Okay. It tracks everything. And it's a fantastic process. All right. I can't speak highly, or I can't speak more about going through one of them. All right. You need to do it. All right. Julio, what do you mean about indices? What about indices? What's the question about indices? While Julio's typing that. Yeah. So Ray, it gives you a bunch of information. It's fantastic. It tracks it's real time. It gives you charts on where you entered, exit, gives you percentages, gives you your time that you were in a trade. And then it gives you the option of, and that's where I take advantage of it. I write comments and notes. One of the things I personally do is, like, I'll come back here and I will come here and I'll screenshot this entry, right? Where I took an entry. I'll save, you know, I'll copy this and I will paste that in my trade journal, you know, with the link. So if I ever want to go back to actually TradingView and see, all right, what was my entry before, you know, I'll go before, you know, before this candle dropped, what was I looking at? And I'll do it on the different time frames, just like I showed you guys here. And then at the end, if it was a win or a loss, I would screenshot the end result as well. And I would, you know, put that in the comment section as well. So it's just a bunch of hyperlinks. And then below that, I always write a couple things. I go, you know, what was I feeling? You know, the emotional side of it is a huge thing. What was I feeling before? You know, was I overconfident? Was I a little skittish about this trade? Did I not have a good feeling? You know, I write all those emotional things down. And then the other thing I like to do is I give not a play-by-play, but I give it a synopsis of how I managed it. You know, whether, you know, I closed out too soon, or I took partials too soon, or I took partials too late. You know, I write all of that down so that, and what I typically do is on Friday afternoons or Saturday mornings, like I did this morning, I go through, and it takes me, you know, it used to take me almost all morning when I used to trade a lot. But now that I'm only trading maybe 14, 15 trades a week, it doesn't take me very long. I got done in the time it took me to drink my coffee. I was done with my trade, my journal. but I can't express how important it is to journal. All right. Because when you actually see that data and you see, you know, I remember what really got me to do risk management was when I was journaling and I saw that on one trade, I lost 42%. All right. And I said, wait a minute, whoa, 42%. I took, you know, 13 trades and I made 21% on 13 trades. And then I lost all of it and then double in one trade because I risked 42%. All right. So that's what got me to become extremely anal about risk management. All right. So how quickly do I move to break even on indices? It all depends. You know, I can tell you that I always go to break even on the Dow Jones when it's 50 points in profit. Okay. You know, there's some trade, you know, I know a couple of, you know, just look at Manny. When Manny trades his breakup trend line, he's only looking for 10 points on the Dow. All right. Where, you know, I'm looking for that measured move. So I'm going to let it breathe, but I have a very, very, and I know you guys have seen the strategy I use, so I'll go over it again, but I have a very, very, precise entries that I'm looking at. All right. So hopefully, Gary, that answers your question on this, you know, when I move my stop loss and, you know, how I manage it. Okay. But now once we got this, right, once we got 29 or 26 pips in profit, and I said, hey, I'm moving to break even. The next candle came out and just took me out of the market. Okay. Took me out of the market. Now, this is what I want you guys to really grasp and heed. Okay. Because a lot of people, and I've seen it happen, I used to do it. All right. A lot of people wouldn't have moved their entries, right? Wouldn't have moved it to break even. And at this point now, right? At this point, price came down 28 pips and now is sitting relatively a pip in profit here and a couple of pips in profit here. Okay. But you can see now that those that didn't have a stop loss, right? People that didn't use a stop loss, and I'll tell you right now, I am not one of them. I use a stop loss. Okay. I have a stop loss 100% of the time. Especially now that I'm using these extremely tight entries, I do it. All right. So at this point from the top entry, your stop loss should have been hit. It went 17 points down and this one here went even further. All right. At one point, this went negative 30 pips, right? And you were only risking 15. So if at this point, when price came down to here, right? When price came down to here, you were $20 in drawdown because it was double of what your risk was. $20, all right? On a $1,000 account. On a $10,000 account, you were $200, all right? On a $100,000 account, you were $2,000 in drawdown, all right? Not a big thing. It's really only, you know, 4% of this entire, you know, move, okay? But if you're doing multiple trades and if you're managing your trade like this, you're ultimately going to end up blowing your account. All right. And then the next candle that came up, and this is what gives people that false hope. The next candle goes way into profit and hits your take profit, right? Hits your original take profit, you know? So people have that misconception that, oh man, you know what? I was 4% down, but now I just made 4% profit. All right. And then ultimately price just bounces around, you know, it did come all the way up to our take profit. Yeah, absolutely. After it decided to do all kinds of shenanigans, right? This to me is not a trade I'd like to be in. Okay. I got out at a break even. That was good enough for me. You know, once you see price ranging, all right, that to me isn't a good setup. Okay. You can see how price just ranges all over the place. These two swing moves here, 100 pips up, 100 pips down, 100 pips up. This to me, I don't like trading like this. Okay. But this trade in itself gives that false hope that, oh, you know what? I shouldn't use my stop loss, right? I shouldn't use my stop loss because they're just going to come and hit my stop loss and then go into profit. And the problem is, even if you did take a loss, say you didn't move your entry into profit and you did take that 2% loss, right? That 2% loss will be always better, all right, than taking a 42% loss. All right. I'm telling you, don't be afraid to lose. Don't be afraid to lose trades, because in the bigger scheme of it, it is going to make you more money. All right. I can tell you, and everyone's heard, you know, my story. I've explained it, how I lost my first three accounts, you know. That's why I always tell people, listen, you want to go live, throw $100 in an account. Don't throw anything more, you know, because you're going to lose your first account. I guarantee you're going to lose it, right? Because the mindset, the psychology behind it is so much more powerful than on a demo account. All right. It took me 3 live accounts, right, to finally get it. And then finally from there, it's allowed me to, you know, just continue to multiply that account. Now let's get into the next one, right? Let's take a look. Hold on here. Let me pull it up. So I didn't take that USD Swiss franc from Steady. I personally didn't. But I did take, which one's this? Euro USD. Okay, so Euro USD, right? Let's take a look at this one here. All right. Ideally, again, I was looking for, here we go. Don't even get me started on this one. I was hurt on that one. So Euro USD, I was looking for an entry on just before the 9th. So the 9th would have been, was I looking at an entry there? Let me see. So we're on the 1 hour time frame. We'll go to the 1 hour. I want to say it was here, London. Let's see. All right, so there's that candle. All right, so it was off. We were playing off this candle here. Okay, so here, let me get rid of this here. Okay, so what I wanted to do was play off this candle here. Okay, I wanted to play this candle here. So let's just kind of go into it. All right. All right, so this was, ideally, this was the last up before the down, okay? And you can see price is respecting, right? Back here, price is just making it's making a low, right? So on the 1 hour time frame, when price broke below here, all right? Hold on, give me 1 second. Let me turn my fan on. Sorry, guys. All right, so structure is a big part of this strategy, right? So once we broke this low, right? Once we broke that low and we closed below it, ideally, that's where I was looking for the next entry, right? I was looking for that next entry to come down, all right? So this was the last up candle on the 1 hour time frame. So really, I'm looking to see, was it mitigated, right? Was it mitigated? So from this high to this low, okay, that's where I'm looking, right? I'm looking at this 50% of this candle to get mitigated. So just on this entry here, right, this is what I would be looking for, an entry off that 50%. My stop loss, entry at the 50. Stop loss, ideally somewhere in there, okay? We'll be able to narrow it down by going to see what our risk would have to be. But so on the 1 hour time frame, we have that. On the 30 minute, right? On the 30 minute, that candle needs to mitigate right there, okay? You could see 7674, we're talking about 2 pips, right? 2 pips. I'm willing to give up 2 pips on my risk just so I make sure I get into the trade. All right. Now on the 15 minute, can you see how 50% lines up exactly where the 80% of that 1 hour, or I'm sorry, the 1 hour candle was? So that gives me another area of confluence. Okay. Now on this candle here, right, on the 5 minute, do you see how this candle wick ideally mitigates this up candle, right? So if I come here, do you see how this candle pushes up past the 50%? So this candle has been mitigated. All right, and then let's go to the 1 minute. Okay, so this is where our risk is. Okay, you can see that price still needs to mitigate that 1 minute candle. This is the last up candle, right, before the drop. So whatever market maker created price to go up, all right, this is the same. The theory is this, right, and this is the hardest concept to understand. The theory is this, that whatever institution created these orders to drive price up, turned around right at this price point and sold it down, but needed to maintain this open position on the buy. So eventually they would need to come back up to at least 50% to mitigate out of this position, okay? So the risk would have to be right up here at the 100% of that candle is the risk, okay? That is the risk for this setup. 1 minute. Okay, so now let's go to the 15 minute and we'll play it from there. So we have a couple of things that we can set up, right? We have our first order, okay, which I would take off of this 50%, all right? Risk right here, 12 pips, 1 pip. Euro USD only has a 1 pip stop loss, okay? And then our next order, you can either choose to take it off here, or if you want to have just a ridiculous entry like we did on UJ, you take it off of here, okay? I personally took it off of here. Just because there is no rule that says that they have to come back and mitigate this on this move, right? So this is what I was looking at, all right? And I don't want to, oh yeah, those equal lows, okay? So in theory, the thought was that we were going to come down here to this equal lows, okay? Now remember, I was bearish on the DXY, so I'd be bullish on this, okay? I'd be bullish on this. So this was, and like I explained it on Tuesday night, this was a move where I was looking to sell to buy, right? I didn't know exactly where would we get that entry for the buy, but I wanted this to sell down so that we can turn around and buy it and make a new high because I was bullish on Euro USD, all right? So this was a counter trend move, right? This was a counter trend move. But even if we took it to these lows right here, right? Even if we took it to those lows right there, we are still looking, all right, at a 5.5 and a 3.5 to 1 ROI, all right? So by risking 2%, we were looking at making 9% profit on a relatively small move, okay? Relatively small move. Bear with me here. Was this the entry? No, that's on AJ. Okay. So you can see ultimately how this played out. All right. So on that one there, right? On that one there, both of these orders are now activated, right? This one here came right to 50%. All right, this one came right to 50%, and then this one here got ordered. All right, so do you base your entry off the 1 minute institutional? You could have, right? So this was the 1 minute institutional up here. I chose not to take the entry off the 1 minute. I took it off of this is the 1 hour, right? This 50% is the 1 hour. And then this candle, 15-minute candle here is where I took my second entry. The reason I didn't choose to do that is I didn't think we would get it all the way up there, right? I mean, it could have, absolutely. How do I choose which one to use? Well, I have me personally, I do an aggressive and then I do a conservative, right? So my aggressive entry was this one here off the 1 hour. I didn't want to miss the move. So I would take a 13 pip stop loss, right? And then I just took the second one, the 5 minute. I didn't think we would get all the way up here. Okay. If there's multiple time frames, you just have to choose which one you want to take. The risk, like you saw, right? The risk, no matter, you know, whether we took it off the 1, the 15, the 5, or the 1, your risk still has to be up here. The risk doesn't change. Okay. So in this case here, I did 1% and I did 1%. All right. Then ultimately you can see, let me see here. At one point we did go to, so on this candle here, we did go to 15, you know, over the 15 pips. Okay. So both of these were brought to 1 pip break even. So this one here was brought to 1 pip break even. This one here was brought to 1 pip break even. All right. And you can see ultimately I was stopped out in profit. Okay. So that was 2 trades for me personally that were stopped out in profit. But what this gave me was, this gave me the opportunity to then turn around and we can buy it. Okay. You can see, bear with me. Where did we take the, hold on. Let me just pull up the buy on it. Yeah, here's where I sent it out on how I managed it, right? At this point here, we were 28 pips in profit, right? And I was personally at break even, right? I was personally at break even. Yeah, so you can see here right at 12 o'clock, I'm personally looking to start taking profits at the 1.08200, which was down here. Ultimately, we didn't get that, right? We didn't get that. It did break us out in this area here, okay? You can see at this point here, off this higher one here was at 21 pips. But bear with me, I'm just looking through the Telegram here to see where we got into the buy. All right, the buy was later. Okay, bear with me. So the buy was later. So this one here again, this one for me personally was a break even. So now I had 2 break evens, right? 2 break evens on the charts. All right. And I'm okay with that, right? I'm okay with taking the break evens. I don't mind it. Actually, that was the buy right there. I still have it highlighted. Yeah, that was the buy. Okay. We'll get back to Euro USD. So now let's get to UJ, right? We'll get to UJ. UJ was a flipping awesome trade. So I sent this one out. When did I send it out? I sent it out at 7:25 p.m. All right. This is what I was looking on UJ. All right. And I'll break it down, but I was looking at these two. We can just get right into it. Let me pull it up. So on UJ, we'll go right back to this area. We'll go right there. Okay. So the 2 thoughts that I had, right? I had a 5-minute and then I had the 1 minute, right? So, and this is again going to, well, which one do you pick from, right? It's again, looking from the bigger time frames and looking down, okay? Now at this point here, at this point of the week is when DXY was starting to get that bearish momentum, okay? So you can just see, right? We are respecting the moves, all right? We are respecting the higher highs, or I'm sorry, the lower highs and the lower lows, okay? Right? We have a high, okay? We have a low, we have a high, we have a low, we have a high, okay? We have a low. This one here is your previous high, okay? If, you know, this is where people get confused. They would have thought that this here was a previous high, and because we didn't go lower, all right, that this was a violation of structure, and it's not. It's not, okay? Because we did not make a new low, doesn't mean that it's a break of structure, all right? It would not be a break of structure, okay, until we take this high up here, if that makes sense, all right? This is the high that would need to break before this is now an uptrend. All right, does everyone understand that? I'm going to wait a second. But because, you know, thinking that we broke this high right here, all right, does not make this a break of structure. We would have to break above here. Awesome, awesome. Does it have to be a full body closure? But on one time frame, it would have to. Okay, so just hypothetically, let's just say, hold on, let me delete this shenanigans. Let's just say hypothetically that this did break above here, right? Just say it did, okay? Well, it would have to be a candle closure. The 5 minute, it's not, right? The 1 minute, just say that we were expecting this to be, you know, a break of here. If this candle body on the 1 minute did not close, it was just a long wick, say like this, right? See how this is a long wick, right? Then that's not, all right? That's just manipulation. You want a candle closure to be above that. Whether it's a 1 minute candle, whether it's a 5 minute, a 15, it doesn't matter, but it needs to close above it. So that's why sometimes you'll see me jump down to the 1 minute to see the price action, all right? So now when identifying this area, right, we have a couple of things that I'm looking for, right? So we can go to the 1 hour, right? On the 1 hour, do we have the last up, was it mitigated, right? It was, okay? Because this is the last up candle, right? Again, I can't stress this enough. It is no coincidence why price comes right to this 50% and then drops. Okay, because it mitigated out of this position. All right. Again, I'm not going to, you know, I don't discredit any pattern traders. I don't discredit, because I used to be a pattern trader. Any breakout traders, any break and retest, any harmonic traders, you know, there's 1,000 ways to do it. I personally, the way my mind works is I wanted to know, why the heck did price turn around right here, you know? And once I learned this strategy of smart money concepts, it made sense, right? Whatever it was, you can call it whoever, Chase, Citigroup, you know, Morgan Stanley, caused price to come up on this time frame, right? Because price is fractal. So no matter what time frame, the same thing's going on. So on the 1 hour time frame, this caused, this is where Morgan Stanley went into the buy, okay? On the next candle, they were still in the buy, right? They were still in the buy. But where the candle opens and closes is where they need to mitigate out of that position. If I saw it happen right here, would I've entered the market? If I was looking on the 1 hour time frame, yeah, this would have been the entry right here. You know, this would have been the entry right here. But you don't need to. And I know I've explained this before. You will never see me run to my phone to enter a trade. You will never see me rush trading, okay? I'm very methodical and I'm very precise about it, because I need to know everything. I need to know my entry, my targets, and what my risk is, okay? So this would have been your entry, right? You could have, just hypothetically, right? If you would have entered, and this is how you have to think about it, if you would have entered off 50% of that candle and your risk was at the base of that candle, right? All right, because that's really how you would have traded it off of that, all right? You were risking 1.5 pips. And even if you took it to the previous low of that candle, okay, which would have been here, all right? So if you were just, ideally, if you were just trading from the 50% mark to that end of that candle, that was 11 pips, right? That's a 7-to-1 ROI. Okay, it made a higher high and a higher low. Where do you see the higher high, Julio? Are you thinking that because it broke this here, that's a higher high? No, right? Think about structure. So I'll go over it again. Ready? All right. So this is your high. This is your higher low. I'm sorry, your lower high. This is your, sorry, lower low, lower high. Lower low, lower high, right? Lower low. You can say that this was your lower high because it was below this, right? but it didn't make a new low. Instead, right, it didn't, this is not a new low. So at this point, when price does this here, all right, this is your lower high, this is not a lower low. So what happens? Well, price comes back up here and just creates a new lower high. This is not relevant. And because it made a new lower high, which was below this, right? Because it was below this price, this is irrelevant as well. No, these two positions here mean nothing, okay? So this made a new lower high. And at this point, we don't have a new lower low, right? So in order for it to be a break of structure, right? In order for this to be a break of structure, this price, wherever it is, would need to break above here, okay? That would be a break of structure, all right? So now going into this, okay? Going into this, we have price, that was the move on the 1 hour, right? So we can clear that out. That 1 hour candle's been mitigated. If we go to the 30-minute, right? 30-minute, obviously you can see 50% would be right here. That's been mitigated, okay? Do we have a 15-minute candle? We do have a 15-minute candle, right? This last up candle, okay, needs to be mitigated out of, right? So we just come here and we line it up. This is the 15-minute candle, all right? So I personally take entries off 50% of that 15-minute candle. Do we have a 5-minute candle that needs to be mitigated, right? Do we have a 5-minute? We do have a 5-minute candle, okay? But to me, right, to me, this is not a candle that I'm looking for, right? This is not a candle I'm looking for. I'm looking for, you know, a larger candle. So if I come to the 1 minute, am I looking, do I see a larger candle? You bet your butt. There it is, right? So this candle has been mitigated out of, but now we have this candle here that has not been mitigated out of, right? You can see, and I still have the markup on it, you can see here, I'll just put a new one on it. You can see from this to here, price needs to come into 50% to mitigate this candle right here, okay? Does everyone understand that? That price, whatever order created that up move, turned around and sold it down, so they need to hedge out of it. They need to either break it off at even or for a minimal loss before they can take the market lower, all right? So let's find our risk. This is the 1 minute. So what's our risk on the 1 minute, right? Well, the risk essentially is going to be that open and close of these two candles, okay? That's the risk. 1 minute stop loss, all right? So now we can come back over to the 15-minute. And again, it's very simple, right? I have two areas that I want to take an entry off of, okay? I have two entries that I want to take an entry off of. Where do I want to take those entries off of, all right? Where do I want to, it's pretty simple. I'm going to take one off of 109.06, okay? My risk really didn't need to be anything more than 1.6, right? Doesn't need to be anything more than 1.6, all right? I personally used a 5 pip, all right? I went to 109.10. That's that's what I used here, 109.10. I just gave it a little bit of a buffer, okay? And let me go back to the 5 minute and I'm going to show you this as well. So in Confluence, because I didn't have this on here, right? An area of Confluence, what do we have, right? So we do have on the 15-minute that candle, right? But you can see that we have an imbalance on the 5 minute right here, right? You can see this down wick, the up wicks. We have an imbalance on the 5 minute. And then if we measure this candle that created the imbalance, %, comes in at 101.08.979, and 50% of the actual candle comes in at 1.08975. So we're talking about 4 pipettes, all right? So this 15-minute gives me the confluence I need and the conviction for the trade, as well as that 1 minute, all right? So now, what do we have, right? We have entry number 1 up here, risking 4 pips. UJ, normally a 1 pip spread. Let's go with a 5 pip, right? And then we have this coming in off of the 50%, all right? Coming in off the 50%. Again, stop loss, I used to 1-0. You really didn't need to use it to 1-0, but that's what I was looking for. All right. Now, what were my targets? Target number 1 is always going to be the area of liquidity sitting right here, right? These equal lows. Okay. This is where a lot of money came into the market on one time frame. You would see the opposite of this last up candle. You would see the down candle. So that's going to be my area for target number 1. For target number 2, right? For target number 2, I would be looking in this area right here. Okay, this area right here where these lows are. All right, because there's also a little bit of imbalance on the 15-minute. When you get down to a 5-minute, there's a little of imbalance. But ultimately, I wanted to see price get down into take profit 2. All right, and then if we got down there, take profit 3 was my next big spot I wanted to go, because I wanted to start buying UJ from down here. All right, I'm actually looking for next week. I'm going to be looking to buy UJ if we can get down into this area. All right, so when we're managing this trade, we have our targets, we have our 2 entries, and we have what our risk is. All right, so now it's just a matter of playing it out. All right, you have from the higher time frames, would you not narrow them down on the smaller time frames? Which one are you talking about? Like on this H1 here? Yeah, so when it comes to imbalances, right, the higher time frame takes precedent. So if you think of it this way, right, this imbalance needs to get mitigated on the H4. Is there an imbalance that is tighter on the 5-minute? Absolutely. Is there one on the 15-minute? Absolutely, right? But if I'm looking for targets, right, if I'm looking for targets for take profits, and you can see here, all I did was on the H4, I took 50% of the H4, and that's how I got this 50% target for TP3, okay? When I'm looking for entries, right, if I'm looking to take an entry like on Euro USD I did on the buy, and we'll get to that next, then I will go to a smaller time frame where the imbalance is, okay? But on every time frame, imbalance needs to be mitigated. It just, there's no way of me knowing at what time that is going to get mitigated, right? So when it's for targets, I don't mind having a larger range for a target. When it's an entry, I want it to get as close as I can. All right, if that makes sense. All right, so we do have our 2 areas here, and I was looking for take profit 2, right? Whether, you know, it was 1.08 flat or even a nice round number of 1.08 100, you know, something in those lines, right? When it comes to targets, I do like quarter theory. I like these round numbers just because it's, to me, not getting 95 pips and not getting 97 really doesn't matter to me. Okay, so you can see, you know, on the 15-minute candle, this was a 6.5, almost a 7-to-1, and on that 1-minute candle, this was a 23-to-1. All right, so I took a break even on ECAD and I took a break even on Euro USD. All right, so now how many pips in do you put your stop loss and profit in your trades? I go to break even. That's how I manage it. And I'm going to show you exactly how I managed UJ. All right, because this is the only one I really managed this week. All right. So let's talk about it. Okay. I want to say it was evening. I went to bed and we were in profit when I moved to break even, but I'm going to kind of give you an idea here. Okay. So, all right. So on this candle here, right? Let's look at it. So on this candle here, it was 7:15. Remember, I had sent this out right at like 7:20. So I was sending this out. I was marking this up on my charts when this was happening. All right. So this candle is the one that gave me the entry. I sent it out. It gave us another entry on it. There it is, the next candle. All right. And then we moved away from it. All right. So you can see at one point we were, I'll just use this one here. So at one point from entry, we were 14 pips, right? It was a 1-to-1 because I remember sending that out. We were risking 12. We were already we were already at a 1-to-1 at this point here. All right. And Gary, this goes back to your question about, you know, should we re-enter? At this point here, I personally had a really strong conviction that we were going to come up here. All right. So I did not move my stop loss to break even yet. Okay. And the reason I didn't is because I understand, again, and this is just something you're going to get with experience, right? You know, a lot of people have that misconception that trading is extremely easy. It is, it takes no, you know, it's literally just putting numbers into your MT4 and then you're done, right? And it could be, you know, I'm not knocking that. But I definitely over the last year have dedicated a lot of time to this, okay? And it shows, you know, when you see how I break down the market, I mean, I definitely have a very good conceptual, fundamental, and technical sense of what's going on, all right? I know that US dollar, Japanese yen during the Asian market tends to give out fake outs and it tends to consolidate, all right? Much like a couple of weeks ago when we were trading UJ and USD Swiss franc on a live call on Tuesday night, I remember somebody, I think it was Matt, you know, price had come up and you guys were like, hey, price is at our entry point, and it was like 8:30 at night. And I said, yeah, I'm not too worried because I'm expecting it to come right back up. You know, even if we move away from it, I'm expecting that during that pre-London market, it will come up and trigger my order. And that's just because of experience. I know that, you know, this is going to range during Asian. And ultimately pre-London, like that 1-2 o'clock in the morning, it gives that spike, which is a fake out, right? To get people enticed to say, oh, guess what? It's breaking structure and we're going for the buy. And it's just going to do exactly what I think it's going to do. All right. So in this instance, I was not at break even. Okay. I actually went to bed, and I'll get to it when I get to bed, how I played it, but you can see the next candle, we come up. Now we are in drawdown, right, on this 50% order. Okay. I am in drawdown. All right. The next, bam, you don't get a better entry than that. Okay. You don't get a better entry than that. That was the entry off the 50% 1 hour candle that you only needed a 1 pip stop loss. So you know what? Hold on. I'm I probably would never do this in real life, but I just wanted to see what that was if we used a 1. There you go. That was the stop loss. So we would have done 2 pips because you can't do 1.6, 2 pips. All right. And even if we took it to right here. All right. So you're looking at a 23-1 off of this, and we'll see how far it actually went. All right. But this was the order. This is what activated the order at 9 o'clock. Okay. 9 o'clock. So smaller time frame traders, right? Smaller time frame traders are looking at this and thinking we are in a buy because you know what? What are we doing? We're making higher highs and higher lows. All right. But the higher time frame always takes precedent. All right. Sorry, had my wife made me a little coffee, iced coffee. All right, so next candle, and this is what I do like to see. I like to see that movement away, right? I don't like to see it lingering, all right? So you can see from this point here, we are roughly about 10 pips in profit, all right? And then we kind of just consolidate like I expected, right? That is what consolidation looks like. It's like a 10-point range, all right? That's midnight, 1 o'clock. All right, so here is that pre-London time, right? That pre-London time. Now, at this point, how am I managing this trade? And I was up late that night. I was playing video games with my son and stuff. So at this point, what am I looking for? All right, so this is what I do on the 15-minute time frame. Where does price have to go up to, right? You can see this candle here mitigated this last up candle. But now what do? Let's go to the 5-minute. Do you see how price now needs to mitigate this candle here? So price, okay, price has no reason to go above 1.0902. Okay, my entry was at 109.06. So what do? I move my stop loss 1 pip in profit to 1.05 because price has no reason. Now, I mean, it could, you know, come up in here, maybe a half a pip above it, but price needs to mitigate this 50% candle, okay? It needs to. So that's how I managed it. This here, this 50% off the 15-minute candle, stop loss was the original stop loss at 109.10. But my bigger position, my bigger lot size, okay, is now 1 pip break even. And that's because we have now mitigated everything except for this candle here, and it has no reason to go above it. All right. So to give you guys an idea again, right? So we have our first entry off the 15-minute, which is a 12. So we'll say, we'll give it a 14 pip stop loss. Okay. So on UJ, come to UJ, 14 pips on a $1,000 account, right, is a 0.07. So this is a 0.07, again, risking $10, okay, per 14 pips. All right. So that's how I determine what that is. And then this one here, we're going to go with 5. All right. So this is a 0.21, right? 0.21. And it's $10 per 5 pips. And I just want to see what the heck this one would have been too. Let's just see. One day I'm going to have the cojones to do it. 0.54. So this is a 5-4 lot. Okay. $10 per 2 pips. So every time we get 2 pips in profit, that's $10 on a $1,000 account. All right. So we're here. All right. Again, I knowing this, looking at the time frames, I know that this candle here needs to be mitigated. And then if you looked at the 1 minute, right, at the 1 minute, what needs to be mitigated on this 1 minute? Well, if we come here, you can see that it shouldn't go any higher than 109.04. All right. So that's why we got in at 109.06. My stop loss was at 109.05 and I went to bed, right? I went to bed. No big deal. Whatever happens, happens. Okay. So you can see pre-London. This is pre-London 1 a.m. And there's London open. Okay. Actually, hold on. There we go. All right. So here is 4:30 in the morning. And at this point, right, at this point, from this 50%, we're at 11 pips. And from this one up here, off of, where was it? Off this candle here, we are now 19 pips in profit. Okay. So if you were up, at this point, I would be getting ready to move all of my positions to break even, okay? And you can see once we got into New York, let me go to the 1 hour candles because it's a little easier to move. Okay, so at this point, everyone's positions are in profit, all right? And that's exactly how I managed it, all right? You can see here, we're at 16 pips off the bottom one, all right? Let's move it over. And then during New York, you know, we pulled back a little bit on New York, no big deal. 1 pip break even, right? Again, I don't care about hitting a break even. I don't care, all right? That is equities open at 9:30. All right, yeah, here's the 9 o'clock candle. And you can see we go right to our take profit 1, right? Right to take profit 1. So now what do I do at this? What do I do at take profit 1? So at take profit 1, what I like to do is I take 30% of my position off, all right? So on this one here, right, just to figure out what 30% of that position is, okay? You know, you can come here and you can close out, you know, if you're running a 0.21, just go to modify your order to close it out, close out order, and it would show 2-1 in the lot size. And you can change that. Instead of a 2-1, make it a, you know, a 0.07. So that would tell you that you're going to close out 0.07 of this order. And on this one here, you can make it a 0.02 or a 0.25, you know, whatever you want to do. And then close those 30% of these orders out. And you're going to have a remaining 7% 30% of these orders, 70% are going to be running. All right. And then when I get to take profit 2, I close out another 30. And when it gets to take profit 3, I close out the remaining 40. All right. That's how I personally trade it. Okay. Now, if I do see signs of a reversal, okay, I go ahead and just close out the entire thing. So on this order, that was 9 o'clock. So if you brought the 0.21 to 0.07, would that not be 2/3 taken? No, I'm only closing out 0.07. So when you go to the order and close and you hit close and you put 0.07, you're only closing out 0.07 of that order, which is 1/3. It's the closest thing to, you know, to doing it. Okay, does that make sense? No, that's what you're closing. So when you hit close, when you go to, you know, I have an iPhone. So on the Android is totally different. I don't know how that works, but on iPhone, when you just go to close, hit close, and you just change the lot size to, you know, in this case from 0.21 to 0.07, that would close out 0.07. It'll tell you, you know, like 0.07 is like $14 and whatever cents. Okay. But you can see, so we moved down. We came past the next area I was looking for of interest. Now we did pull back a little bit right around here. Okay, no big deal, but think about it. As you're managing this trade, right? What are you looking for? And I forgot to do this. So I actually got into another position, right? So on the 15-minute time frame, right? On the 15-minute time frame, let me move it back. And again, most of you know how I trade my indices, okay? Once we were, this is actually during New York session when I was trading, all right? So I got this nice impulse candle right here, right? I got this nice impulse candle right here. So all I did was I measured from a candle open to candle close, and I had another order sitting here. Now these are aggressive moves. So on this position here, I was only risking 0.5%, not 1%, but 0.5, okay? So I was risking, I had a stop loss of 4 pips. You know, this is 3.8, but I had 4 pips, all right? And I was just running it down to this take profit down here, okay? Just like that, that's how it looks. So this was another, you know, 2.5% I was gonna get off of this setup, all right? And you can see price immediately runs down. You can see that it came back to wick me in and then ran down. All right. So on this next candle, because this is what I'm looking for, I get another 50% order. So this one here is at break even. Everything else is in profit and at break even. So now I'm going to take this order right here. Again, my stop loss, I'm only risking 0.5%. Stop loss 4.5. I rounded up to 5 pips. All right. And again, I'm taking it right down to this area right here. Okay, so I'm looking at getting a 2.5% here and roughly like a 1.75% on here. These are just quick little scalp moves that I'm looking at. All right, just like, you know, how Manny does his trend line, I do it off 50% of the candle mitigation. All right, bam. This one never got activated, but I did get this one up here for that 2.5%. All right. So now, while I'm managing this, all I'm looking for is areas that price has to come back up to. So looking at the 1 hour time frame, right? Looking at the 1 hour time frame, I know that this last up candle needs to get mitigated. So I come here and I know by looking at it, do you see how this candle drops below and then comes back up and mitigates into 50%? Okay, so this candle has been mitigated by this candle here. All right, so I just drop down into the time frames and I start to look, well, this candle here, do you see how this comes back to mitigate it? So that's good. Don't need to worry about a 15-minute. On the 5-minute, right, this has all been mitigated. On the 1 minute, what are we looking at? So on the 1 minute, okay, on the 1 minute, this is the last candle. So this is where I move my stop losses are from break even now up to here, okay, 108.91. And that's how I manage the trade, okay? So my stop losses have now been moved from break even all the way down to here. And then I just continue to let the trade play out, okay? I let the trade play out. Obviously, I'm expecting this area in here, and I can delete this. Let me delete this, right? So yes, that's the same way I'd scalp US 30, yep. So I'm expecting this here to get filled in, right? I'm expecting a pullback okay, for this to get filled in, but I'm not stressing about it because I know that price will eventually continue to go in my direction. It needs to, right? And the reason it needs to is because I'm waiting down here for my buy, okay? So we'll allow this to play out, okay? You can see just price consolidates here. We'll just play it out. This was, no, I don't do trailing stops. I personally do not do trailing stops. Okay, because at what point, let me ask you this, right? So if you're trailing your stop, and just give me, let me ask you this, Ray, what is the standard trailing stop that you use? Okay, all right, well, let's just say hypothetically use 25 pips. All right, let's say you did 25 pips. So 25 pips, all right, you're out of the trade. When this pullback happened, you're out of the trade. All right, let's say up here. That's 19.1. So you would have been all right, but you're out of the trade up here. Okay, so no big deal. I mean, you could be out of the trade. Ideally, you would have taken out. You would have gone 13. You would have gone 14% there, and you would have gone 4% there. So you would have made 17%. All right, no big deal. I mean, that's a good day. That's a good week. Okay, I personally don't trade trailing stops because I understand where the market has to come back to. All right. Trailing stops to me are for folks that don't want to ideally manage the trade, not to see where price has to come back up to. All right. I'm looking to see where price needs to come back to go ahead and mitigate it. All right, hold on, Gary. Let's see. So, Mike, I get that you went off your DXY bias. We're looking at sell, but on the higher time frames, there is no obvious structure for the downward move, right? So on the higher time frame, remember, I said when I started, UJ is bullish, right? UJ is bullish. Yeah, no worries about the questions, man. No worries at all. UJ is bullish, right? So when you look at the, like the daily, whatever, okay, what are my targets? Okay, on my targets are up here. My targets for UJ are these equal highs right up here and these equal highs up here. Okay, those are my targets. But I don't mind dabbling, right, in the pullbacks, right? Because I used to just sit there and wait for price. I would have waited all week for price to come down into here, right? I would have waited all week. I would have waited 2 weeks for it to happen. But I understand now where I can get into entries, okay, to sell it down. Does that make sense, Gary? Perfect. Yeah. Awesome. Awesome. So again, what I'm expecting price at least to come up into this area here on a pullback. Okay. So I'm still in the trade. All right. I'm still managing it. Now, obviously at this point here, I have taken off a third of my position. Okay. And then you can clearly see we pull back, right? And here, you know what? Let's just take a look. Why did we pull back? Let me just show you this. All right, so on the 15, on the 5, I'm just looking to see if there's any mitigation done. Okay, so just take a look on the 1 minute, right? On the 1 minute, what's happened, right? Do you see as price is coming down, it pulls back up, right? So this is the last up on the 1 minute. So this area, this candle still needs to be mitigated, right? We still need mitigation on that candle. That candle needs to be mitigated. So I would expect, right? You can obviously see That candle's good. So what I typically like to do, this candle up here still needs to be mitigated. This candle needs to be mitigated. So my stop losses have to be above that. Okay. Do I want to take, I've already taken partials. I've already paid myself, you know, so I'm okay with it. And I just kind of keep going down, you know, well, why is price pulling back? You know, one of the key things, again, that you have to start looking at is, let me get back to where price was. One of the key things you have to start looking at is obviously the DXY was going bullish, right? It took a little bit for us to get in there, but now remember, we're bullish on UJ and we're bullish on the DXY. We just wanted to mitigate. But now the Japanese yen side of it, right? We also need the Japanese yen side of it to strengthen, okay? We need that to strengthen. And that's why I like to see the Japanese futures, okay? I kind of correlate the Japanese futures with that as well, all right? But bear with me here. Let's just get into, come on. Let me go to the 1 hour. We're going to be here for a while. Remember what happens during Asian session, right? Here is Asian session. Here is London. Do you see that consolidation just going sideways? And then we eventually, that's how we closed on Friday. Okay. I sent, let me look right now. No, I don't look, that's not how I trade the future side. Let me show you. So I'm looking at Telegram real quick just to show when I got out of UJ, but give me a second here. So at 7:55 in the morning is when I said that. Yes. So yeah, exactly. Karina, that's kind of what I do. So let me pull up the Japanese futures. Okay. Yeah. So kind of like you could see here, right? I was looking, we had an area of equal lows. Okay. I was looking for price to drop down and then to pull up. It was going to grab the liquidity and strengthen. And obviously you could see that's what happened. Okay. My next area that I'm going to be watching is obviously this big arrow. Okay. I want to see us now, if this starts to drop, that's where I'm going to start to get my bias that buy for UJ is ready. Okay. You know, right now we're obviously just in a range. Okay. We're in a range and I'm kind of, there we go. I'm kind of just watching to see, but I do want to see this start to drop. Okay. You know, Julio, I know you like to correlate indices, right? The Japanese future side is what I like to correlate indices with. If the yen starts to drop dramatically, indices will go up. If it starts to go up dramatically, indices will go down. All right. That's how I like to look at the yen future side. And then there's some other stuff I like to watch as well. But for the most part, DXY and the yen futures is what I like to watch for my UJ trade setups. Okay. And again, I'm 100% confident that this is going to be supportive on the dollar side. So what I'm looking for on the UJ side is a buy in this area, right? I want to see UJ come down and get us into a buy. I do believe this is what I was looking for a target. I want to say we closed out Friday morning, somewhere in here is where I closed out. And it might've been just like in this area here on these lows, somewhere in here. I was looking in Telegram to see where exactly I took profit, but on Friday, I kind of sent it out. 6J1 is the ticker, 6J1. But just to take a look at it, right? Where did that, I mean, if you would have held to here and called it a day, that's fine. You know, I personally took it here on Friday morning. I was happy, you know, with these. I mean, that was a 17-1 and this was almost a 5-1. Okay. You know, and geez, man, if you would have taken this just like there, that's a 43-1 for a max, right? I mean, 1% on this, you would have made 43%. If you would have put a 2% risk, that's, you know, 86. That's ridiculous. But yeah, so UJ, that's what I was looking at. Now, do I still see UJ going down? Yes, but I'm not holding it over the weekend. I'm going to be ready now off of these two areas. By then you had closed 30. Yes. Yep. Yeah. So I closed out here, my 30%. So, realistically, you're looking at another 23 pips worth, depending on what you held open. Okay. Do I set alerts for what? For TP1? Yeah, absolutely. I just put a line, like normally you'll see me post it, but I just right click on the area that I want and just go to add alert, and I type in TP1 hit, take profit. And then I just hit create. So I'll get the alert, when it's time to do it. So that's how I managed that, right? That's how I managed it. Realistically, and this is how another thing that I like to use, right? So say we had $1,000 account here, right? And say you had $1,000 account here. All right. So on these trades, this, you were risking $10 for each position, but here, this trade here, if you didn't take partials at take profit 1, you would have made $170. All right. I'm sorry. $170 is what you would have made on this position, and $47. So you would have made about $210 on a $1,000 account, which is 21%. That's a nice day all day long. If you would have taken this one here, let's just see, $1,000 account. This was ridiculous. So you would have risked $10. You would have made $302 on that. So, I mean, that's what it's about. You have to identify the risk. You have to identify, your targets, and then you just need to know how to manage it. That's how I personally manage it. That's why when you see me in the trade ideas saying, we're at taking one entry now on that, let's see, all right. So here, I said UJ went to my first targets, and I put in there, come on. Yeah. So I put in there that I was taking, I'm holding my partials open. We're in, 1 pip and drawdown was phenomenal on that. So that's kind of how I managed UJ. All right. Let's take a look at S&P 500, right? So let's take a look at the indices here. Now on the indices, give me a second. Let me pull up Telegram to see exactly where the shot was. Did in the trading family one. I had all this set up on my MacBook outside, so my bad. All right, so let me go to links. All right, let's see. Which is this one? That's EU. Oh, that's the setup I had on EU. Any recommendations for brokers trading indices? So I use CoinEx. I've always been with CoinEx. And I honestly just recently opened an FX Choice account as well. That I'm just checking them out. The only thing, negative thing about CoinEx is once you start getting into a larger account, the commissions are a little high that you have to pay. So FX Choice, I'm just dabbling with them. I'm seeing, how because they have a pro and a classic account. The pro account has lower spreads with a standard $3.50 commission per $100,000 lot size, which is so much better than what CoinEx is charging me. So at this point, that's because I'm getting tired of getting nickeled and dimed on, on the positions. To put it into perspective, I spent a little over $7,000 this past year on commission fees, which was ridiculously high. Just comparing it with other traders that I talk to. So that's kind of why I was looking now for smaller accounts. I think the the spreads are really low on CoinEx, and the commission rates on smaller accounts are fine. But once you start getting into a bigger lot size, it definitely starts to hurt. You know, and it's not that it's hurting me, my profits, but, you know, I'm taking all the risk, and I'm just forking over a couple $100 every time I'm holding a trade. You know, a good example, I held over an oil. I got hit with a swap fee on oil a couple weeks ago, and granted, I made a couple $1,000 on the trade, but I ended up paying almost $700 in commission fees. So I literally gave $700 to my broker for opening and holding the trade open. So that's the only disadvantage. Okay. All right. That was Euro USD. Let's see. UJ. All right. Now, bear with me. I'm just trying to find the trade setup. Okay. So, this was Friday. This is what I was waiting on, the NAS. It never happened. Bear with me. Let me get. Yeah, if I definitely, that's oil. I didn't actually trade that one. I recommend you guys just throwing, if you want to learn how to trade like this, definitely go through that course, but definitely start to just pay attention to these, you know, these imbalances, these areas where SPX. Man, I'm trying to find it now. All right, no big deal. We'll just mark it up. Yeah, Euro USD, the buy, that was it right there. It was off the 5 minute. It was this candle right here. And you can see I have it marked up. So, you know, on Euro USD, right, you can see this is the last down candle, right, before the up. So on the 30 minute, right, that's the 30-minute candle, this candle right here. So if you wanted to take a 30-minute, you could have done so. You know, the entry would have been right there. And we can identify the, what do you need, baby? We need the, now on the 15, right? On the 15, you can see that this was the last up, right? So that's where you would need it to take an entry off of there. But now the 5 minute lined up the imbalance, right? Remember the 30 minute, this was the 30 minute 50%. And you can see on the 5 minute, right? 5 minute imbalance. This was the candle that created that 5 minute imbalance. Okay. So again, how do I build that confluence, right? So if we measure from this 5 minute to that 5 minute, there's the 50% mark. All right. And you're only talking about a difference of 2 pips, right? Difference of 2 pips. So I actually had 2 orders. I had an order off of this 50%, and then I had an order off this 50%. All right. Obviously this one didn't get activated. And then my risk was very simple, right? You just go to the 1 minute and just see, you know, what needs to get mitigated, right? Do we have any areas that require mitigation or that need imbalance fills? Okay. So we know that this candle here has been mitigated, right? Because you can see how this next wick came down and mitigated 50%. Okay. But now on the 1 minute, we do have an area of imbalance right here. All right. So that's where my stop loss needs to be. Okay. My stop loss needs to be below this imbalance area. All right. And on the 5 minute, that's what it looks like on the 5 minute. Okay. That small little area. So ultimately, I only got one order on it. Right, I only got this order activated, so it was 1%, and then my target was right back up to these highs, right? So my target was right here, all right, 73 pips. And you could see it was a 12 to 1, right? 12 to 1. Actually, I used a 8 pip stop loss. There you go. So made just 9% in 2 hours, 3 hours actually. All right. So that's how that UJ trade came out. Do I see UJ going, or sorry, EU going any higher? Yeah, this was my next target right here. This was my next target. Okay, because there's some liquidity up here, and it also mitigate this imbalance on these 1 hours. Okay, so let's get to the indices real quick. Let's look at SPX, right? So what I was looking at, and I talked about this earlier in the week, right? Obviously we had this, let's see, the 3rd, the 4th. We were actually looking to target, let me see if I can find it. Hold on. I want to get the right date. Does anyone, Mike, are you still, if you're still on, what date was that S&P trade? I know it was Wednesday, right? Was it Wednesday? All right, that's what I thought. Yeah. And we were looking to play off that one candle. I'm gonna find it right now. So it was the 8th. Okay. So the 8th is where we were looking, right? So yeah, right here. Okay. So this is the area that we were targeting, right? We wanted to see what got mitigated here, right? On the 1 hour time frame, right? On the 1 hour time frame, this was ideally the last up candle. Okay. I'm going to do all three. All right. I'm going to mark, actually, yeah, this is what I'm going to do. Watch. We're going to play it off like this, so you guys can actually see the correlations. Here's the swap fees for holding trades. Is that for Coinex? Oh, the average of all brokers. Yeah. You can actually go, if you go on Coinex's website, it'll actually break down the swap fees and all that stuff, and it'll tell you what it's a pain, man, sometimes. All right, so we'll make this one SPX. Oh, look, there's the setup right there on SPX. Perfect. All right, SPX is on there. Perfect. And then we'll do the NAS. Delete that sucker. All right, so we'll make this the 1 hour. All right, so we'll do it like that. Bam. All right, we're golden. All right, so let me go to the 8th on the NASDAQ, right? Now, remember I talked about leaders and laggards and all that stuff, right? So we were actually looking, okay? I was actually looking to play off of this candle right here, right? This candle right here. So I wanted to take the 50% mark. Yeah, some of you get paid. EU, Euro USD paid me to hold. Yeah, I don't know. I've never used Trader's Way. Like I said, I use FX Choice and I use Coinex, right? Sorry. All right, so let's get over to this, right? So on the 8th, so on US 30, this is the candle I was playing off of, all right? So what I wanted to see, all right, I wanted to see a play off that candle on the S&P. Again, it was off this candle here, all right? And this was the setup. Let's All right, and then on the NASDAQ, same thing, right? We were looking to play off of this candle right here. Okay. So you can see ultimately they were almost moving in unison. All right. Now the only difference that I was noticing, okay, was this. All right. Now the NASDAQ, and these are the targets that I'm kind of watching. All right. Okay, so you can see that US 30, S&P broke the lows, right? It broke this low, right, and grabbed the liquidity where NASDAQ did not, right? NASDAQ did not. So what I was inclined to do was I was looking to see if price, once we got into an entry, if price was going to take us back down to sweep the liquidity on NASDAQ, all right? Because these all three are benchmarks, all right? They're supposed to move in unison. What I personally was looking for, now US 30 missed my order, right? When we got here, this was 1 o'clock. Okay, missed my order. And here, we're just gonna go to the replay. Let me just see if I do it like this. Does it? Oh, I gotta do all three. Look at that, that's pretty cool. Oh, no, I guess it doesn't. I thought I would have been able to do all three. All right, no big deal. So on S&P was the key one, right? We took the S&P is the actual one that activated, because you could see on this candle here, we never came up to that 50%. And NASDAQ, I know it activated on my order right here. I think it was all, what, 93, and I think it's just because my order, I put maybe 2 points below it, all right? But this was the order that we got into here. And then again here on S&P, all right? The stop loss in this case, so the order, that was the order on S&P, all right? I personally didn't get into US 30 because it didn't activate on that order. So we'll do it like this. Come over to NASDAQ. Oh yeah, see, you can see I got it marked up here. All right, and you can still see I have the 50% mark here. All right, now my stop loss on S&P here was based off of the 1 minute candle. Which goes all the way over here somewhere. Here it is. Let's see. Bam. Okay, so off the 1 minute, right? You can see all of this has been mitigated. And it was the 5 minute actually that didn't get mitigated. Yeah, here it is, the 5 minute. Okay, so this last candle here needed to get mitigated out of. So you can see 50% came in here. So I put the stop loss right here at 27.45. All right. So what we were looking at, where's this sucker? All right, here we go. So what we were looking at was a stop loss of 17 points, all right? And I was looking to take it right back down to these lows, okay? That's the ideal thing I was looking for. So it was about a 5.5 to 1, all right? You can see we did get activated on this candle here, right at 12 o'clock. And we did get into profit about 20 points, right? We did get into profit about 20 points, okay? Now, I want to say I took a loss on S&P, but not on NAS, because on NAS I moved to break even. All right, I was expecting a little bit more move, and I was also looking for at least this to get mitigated down into here. Okay, but it didn't. Right, it didn't. Now, ultimately, what ended up happening? All right, and we'll kind of play that off here. But same thing on NAS. Right, NAS came in, and you can see on NAS, I was about 74 points in profit on NAS. So I moved to break even. All right. I think at like 50 points, I was at break even. And then obviously we just came back and hit it. But what ended up playing out, right? Well, you can see that we broke structure, right? Once we broke above this high here, okay? Once we broke above that high, we not broke structure, but we made a new high, all right? So now it's just a matter of playing the pullback, all right? This last on the 1 hour, right? This last candle obviously got mitigated, okay? But now on a different time frame, let me just go to the one. Let me just go to here. All right, so here's where it got mitigated. So on a different time frame, I guarantee you it went to 50% of that imbalanced area. All right, hold on. Let's go to the 2 hour, 30 minutes. Ah, that's what it was. Yeah, yeah. So I had it here. Oh, this is US 30. My bad. Let me go to S&P. Here we go. Okay. Where are we? I was looking at the 8th, right? Yeah, here we go. Okay. So it's this candle here I'm looking at, right? To see why we reacted off of that. So let's go to the 30-minute. And all it really did was just make these equal lows, right? It mitigated this last down candle, okay? So this position is now out, but you can see like down here, these are still open, right? This last down position is still open that needs to get mitigated out of. So I do see price at one point coming back down here. You know, it sucked that, you know, I took the 1% loss, no big deal. You know, like I said, I don't mind taking the loss. Now what I was looking for on the buy side, right? This is what I was looking for on Friday or Thursday. This is what so for me, I like to move it when I'm at 1-to-1 ratio. Like, so like, let me give you an example, right? So we took, let's see, we took an entry where like here, right? So on this, what was it, the 1 hour? Yeah, okay. So this was the candle that we were playing off of, right? Right here. And the stop loss, right? Stop loss was 17 points, okay? So me personally, when I'm at 1-to-1, so I should have been at break even off of this drop here, okay? I chose not to. And the reason I chose not to is because I was just stupid. I figured, you know what, we're going to get a bigger drop. And I was managing, you know, this is why I personally only like to manage 3 trades at once. I had that UJ trade. I was in EU, and then I had NASDAQ and S&P, and I had 4. And I was also trading on that other FX Choice account too. So I just had a lot of things going on, and I was in the backyard. So, you know, I should have moved it. But yeah, this honestly I should have moved it to break even. Do I expect US 30 to drop on Sunday at the open? I haven't seen anything in the news that would suggest it, you know. Yeah, I don't know. I don't think so. You doubled your account on NAS? Okay, cool. Listen, just be careful with the NAS. A lot of people have, you know, realistically, like with this setup on NAS, right? Again, risk management is everything, okay? So, you know, the stop loss was 41 points, I believe, right? 41 points. And I was looking, you know, to obviously take it down here. But at 41 points, right? That's $41 if you're trading a 0.01 lot. Okay. You know, a lot of people get screwed up with the indices, and that's how you blow accounts. You know, you definitely blow accounts by not understanding the proper risk management on them. All right. You know, obviously NAS, this is what I was looking for on NAS. I was looking Thursday for the drop. You know, it did come in to mitigate this, this area. Like, so on a 15-minute, right, I was looking to play off of this down candle here, but really all that happened, it played off the 1 hour, right? So you can see this is the last down close candle, right? And right, it played right off the 50%. All right, so this candle's been mitigated, but now on the smaller time frame, it still needs to get mitigation on. But understanding why price comes down into that area. Julio had a good setup here off this 1 hour candle, right? Off the 1 hour candle, 50, 80%. You can see, you know, if you would have just taken this trade here off the 80%, you know, which I sometimes do, I take it off the 1 hour, but you have to understand you're gonna have a bigger stop loss, right? And then you just play it off the base, the open of the candle, which is 25 points. And if you wanted to take it up to this here, I mean, you're looking at a 5 to 6. Price didn't go all the way back up. It went at the most. I mean, even if you took it to here, right? If you took it to here, that's still a 4 to 1 ROI. You know, you're catching 100 points by risking 25. You know, what do I see for the indices? Well, there's no reason to look for any. I'm not looking for sells right now. You know, I do have, like on the NAS, we do have some 1 hour imbalanced areas right up here. So I'm not going to be looking for buys in this area here. But if we do get a reason, you know, if it does come into this area down here, I may look to buy it up, and my targets are going to be in this area here. Same thing with US 30, right? I mean, you can see US 30 played off beautifully off this 1 hour candle. It mitigated 50% of that candle, right? 50% of that candle. I don't know what I was doing up here. What was I doing? Yeah, I honestly, I didn't get to trade any of the indices on Thursday. They never came into my buy area. But on US 30, I'm paying attention to this area right here. You know, any drops into this area is what I'm looking at for US 30. For S&P, the same thing. Anything into this area right here. And then obviously NAS as well. You know, NAS has kind of come into that area a little more. Can you please go over the yellow imbalance areas? My figures don't line up Thursday. What, up here? This area up here? What doesn't line up? What doesn't line up? And actually, it's a little higher now. There it is right there now. You were coming up with different numbers. Yeah, I don't know what to tell you. I mean, so on the 1 hour time frame, right? On the 1 hour time frame, bring it up to this. Yeah, just look at, you're just gonna have to look at your chart though, Julio, you know. This was a circuit breaker that popped. Okay, this was a circuit breaker that popped. Honestly, if I were, let me just see something. Hold on. I'm almost positive that this entire area has been mitigated now because of Thursday. So let's do this. Watch. So technically on the 1 hour, right? That's the bottom of the wick on the 1 hour. And if we come over, yeah, that entire area has been mitigated now by Thursday's move. So I can delete that. I don't even need that anymore. Now on the 4 hour, let's see. So this is things I look for on the 4 hour, right? So you can see that this 4 hour candle, up candle, has been mitigated, right? It's been mitigated. And just going up here, this 1 hour, right? So it's from bottom of this wick to the top of this wick is the 1 hour imbalance, right? Because yeah, nothing else has been up there. Is that area on US 30 looking at the same spot Mike Neverett went on his Thursday session? I don't know. I didn't see Mike's session on Thursday. I jumped on for a little bit, but by the time I jumped on, he was looking at like Forex pairs. So I don't know. You know, I can just tell you that would be, he went over it on bounce back 2. Same area right here. Yeah. I mean, it's common sense, you know. because if you want to take a buy in here, you're still going to need, just like this, like if I was going to take a buy on US 30 off this 50%, my risk still has to be down here. So I'm risking 231 points. So on the smallest lot size, the US 30 you can trade, you're risking $231. All right. That's just why, I personally don't like to take 1 hour or 50, this is this was a 1 hour. I personally don't like to take 1 hour pullbacks, but I do like to see it, when I'm managing the trade, because I would expect that this candle needs to be at least 50% mitigated. All right. All that is down to the 5 minute. Like when you look on the 5 minute, there's this imbalance area here, and then the 15-minute candle, 15 or 30. Give me a sec. I measured something. Is it a 1 hour? Oh, it is the 1 hour. Yeah. So it's a measurement of the 1 hour. The 1 hour candle is what I measured. That's where I'm looking to play off of. Can you go to a smaller time frame? You could. Technically, this candle down here still hasn't been mitigated out of, but on US 30, I personally like to give it a bigger stop loss to breathe. 10, 12, 15 points are great if you can get it, but I typically like to give it like 30 points. I'm going to wait to see just how we open Sunday. I'm personally looking for buys. I think especially with these open areas up here and, like on S&P, I'm looking at this big area up here, this 1 hour. Yeah, this big area right here is what I'm looking at up here. We have a nice area of equal highs, this imbalance. So I'm looking for buys. There's no reason that it's coming down. Now, the one thing I did want to talk about is NZD CAD, right? I sent this out on Friday. So I sent this out on Friday, and I ended up closing out a little bit. I sent it out Thursday night. I closed out Friday. Yep, have a good one, Ray. So this was the candle I was playing off of this last 1 hour, 50% right here. And then the 5 minute was this here. Was it a 5 minute? No, 15 minute. Yep. So, and then this 15-minute candle right here. So these were the two setups I was playing off of, right? And you can see, what did price do? Price came exactly pip to pip, right? Now, unfortunately, yep, no worries, man. I'm almost done here. I'm out. I'm gonna go jump in the pool or something. I personally just got done with it because of the spreads, man. The spreads on Thursday were ridiculous because a lot of these pairs were closed. Because oil closed, the Canadian had high spreads, and it was just ridiculous. But this was a perfect entry off of this here. And you can see it moved away beautifully, right? It moved away beautifully. Let's see, bam and bam. Okay. If you would have got into that trade right there, it was only a 18 pip stop loss, and you can see from entry price moved 52 points, and then all it did, what did it do? It came back to mitigate this candle right here, right? So you can see this was the last up candle, right? Last up candle. So that's where price had to come back up to mitigate out of this candle, and then why did price come up here, or this one here? Well, it had to mitigate out of that candle, right? So this candle right here, right? It's no reason, like you have to say to yourself, man, why do they keep hitting 50%? Keep hitting 50%. That's the exact reason. This candle here on another time frame had to mitigate out of this, right? Out of this. But yeah, look at the spreads, man. I took a screenshot of this. 96 pips on NCAD. I don't know, at 7:03 p.m. when I was looking to get into this trade. 96 pips. Look at that, 84.76 to 85.73. So if that would have triggered my order, I would have immediately lost it. So that's why I didn't take the trade. That is just flipping astonishing. And it was on both brokers. Like one was 96, the other was 95 because of oil being closed, you know. But yeah, it's, you know, for me as a trader, that's the stuff I enjoy looking at. That's the stuff, you know, that I understand. I want to know, well, why does that do that? You know, what do I see for NZD CAD? 100%, this is coming down, right? You know, larger time frame, this is bearish. And all it did was just mitigate out of this position, right? So the market had to come back up to mitigate out of this buy so that it can drop, you know? And that's, you know, it's hopefully you guys kind of got an idea of how I manage the trade. You know, I can't stress enough about risk management. I can't stress enough about understanding, you know, the psychology behind taking the loss. I don't mind taking the loss, you know. I talked about this at a boot camp, you know, like your sleep point for a trade. Like if you can't walk away and go to sleep with an open trade, you've over leveraged yourself. You know, even with large account sizes, you know, I don't mind, you know, because I know that even if I lose the 2% on one trade, I'm going to be able to catch, you know, 21% on UJ, you know, and that's it. That's all I need, you know. You know, or that, what was that one trade that we took on US 30, like off this one here? It was something ridiculous. It was like 38, 39%, you know, that I was able to catch on this move because that's what this mitigated, right? This right here, I think we played it off the 1 minute. Yeah, it was off this candle right here. This was the play that I went over on Tuesday night, right? Played right off of this candle right here. And then we just took it to equal lows, right? That's where we took it to equal lows. So this trade right here on US 30 was phenomenal. You know, stop loss needed to be right there. So it's 26 points, you know, and I mean, that right there was a 10-to-1, you know. So I did a 2% risk on it. It was 20% right here. Bam. You know, I mean, that was phenomenal. You know, I don't know what more to say. It was an awesome trade. So I only need that one trade. So for me, I'll take 10 break evens and 3 losses just to get that one trade that I'm able to catch that you know, that fantastic setup on. All right. Anybody got anything else they want to look at, go over? You know, like I said, it was just kind of one of those impromptu things. I want to do an end of the week review on them. And because I know a lot of people have been asking questions on it, you know. You know, mindset, I can't tell you how important mindset is. You know, I've and I'm sure everyone's noticed that I'm taking less trades. You know, before I'd give out like 15 setups for the week. I'm only giving out 3, 4, maybe 5 because you know, I'm looking for those ones that I can get a 10, a 12, a 6 pip stop loss. Because if I can get those and they hit, man, I'm done. I'm done for the week, you know. This week was pretty easy for me. I didn't, you know, like I said, I broke even twice on EuroCAD and on EU. But then I was able to catch the buy on EU, the sell on UJ. You know, I did take the loss on the indices, but I only traded two setups on them, you know. It's, you know, it's just something I'm waiting for. You know, I do have, you know, setups going into next week that I'm just looking at. You know, I'm going to sit there and wait. You know, we'll see how it goes, man. All right, awesome. You guys enjoy. Have a good night or a good afternoon. I'm going to go enjoy some poolside. Hopefully the sun's out. All right. Have a good one. Happy Easter, everyone, and enjoy.